Welcome traders to yet another educational video of Nifty Analysis episode number 10. In my previous video, I had clearly mentioned that Nifty spot is going to be relatively safer until and unless it does not break decisively the support between 11,150 and 11,050. And we can see that this 50 days simple moving average, which I had also emphasized in the previous video, it will give an additional support to the entire retracement which has happened from 11,700 to 11,100. All right. So we can see this entire zone along with this 50-day simple moving average has been able to provide a very good support to the market. Now, the million-dollar question is whether the market is going to take this support and go on the upside, or this is just a small pullback. Well, according to my experience of last 12 years and my analysis, I would say one thing, that every time a trader cannot have a decisive direction in the market because first of all, the volatility is extremely high. The current volatility figures show that Nifty can go up and down every day by 180 to 200 points, and Bank Nifty can do this more than 800 to 900 points. So in this sort of scenario, a trader has to be very nimble footed and very open and accept whatever the charts are trying to tell you rather than you becoming biased about the direction of the market. All right. So I would state it very clear that we are still in an uptrend, no doubt about that. But we'll have two different levels. So in case if one of the levels does not work for us, we are always ready for the opposite side direction in the market and we can act on that, right? So the first level which I would share with you is 11,420. All right. I'm sorry. It's 11,360. So in case if market is able to close and sustain about 11,360, then we could test 11,420, 11,500 and possibly even 11,590 levels on the upside. All right. Now in my previous video, I had also shared the levels for the downside. In case if this pullback doesn't sustain and if market drops down, we should be also ready for the levels on the downside as a trader. So my downside levels are 11,020. It is the same level which I shared in my previous video. So if Nifty closes and sustains below the lower level, at least for a couple of days, below 11,030, 11,020, then we could expect 10,900 levels, 10,800 and possibly even 10,650. Now, apart from the levels, as I clearly mentioned that the volatility in the overall market is extremely high, I would once again share this thing with all the traders, especially the short-term traders. Please take care of your position sizing because currently the overall volatility in the market is so high that if you make money, possibly you'll be making a lot of money in a directional trade. But if you lose money, you can lose also a very big amount of money. So this is the time to slightly reduce your position sizing and play a safer game in the overall trading business currently. And that's it from my side. In my next video, I'll try to share something even more interesting. Till then, trade well.